Welcome back to the channel, guys. Today I want to have just a raw, unedited one-on-one with you guys and just talk a little bit from the heart, because recently I had quite a few new subscribers joining the channel and got a lot of questions about investing on Instagram. By the way, if you're not following me yet, then you can do so. I'm much more active now and starting to post there really regularly on a daily basis. But anyway, basically a lot of people have been asking me different questions, and some of them which I was quite surprised, but then again a lot of them seem to be recurring, so it seems something that people really have a question about. And obviously in this channel my main goal is to help people getting comfortable with investing and start their investing journey. So I really thought it might be interesting to address some of those investing myths and false beliefs about investing that honestly really drive me crazy when I hear them, but I think it's important we talk about, and hopefully it is useful for you, clears out some doubts, and if you have some more questions afterwards, drop them in the comments below. I'll get back to every single one of you. And the first one I hear all the time is people ask me, do I need an investing advisor? And honestly, the answer is a very clear no. Now, granted, you may want to take one, that's totally fine, there's nothing against it, but you definitely don't need an advisor, because actually investing is so simple. And that's actually what I'm trying to do with my channel, to bring more light into the space and show how actually simple it is. People and the industry out there want to make us believe how difficult it is and that we can't do it ourselves, so we buy people's services and trust them with our hard-earned money. And this couldn't be further from the truth, because there's actually some really simple investing principles that have been held true for many, many years. Now, some instruments are changing and there are different ways how to invest, and obviously in this channel I'll talk about quite a few of them, because there is no right or wrong. I'll get to this in a second. You can just read amazing books on investing. I will soon do a review on my favorite investing books. There's amazing podcasts out there. There are great YouTube channels out there from real smart people who investing money themselves. You don't need to trust your money with somebody who claims knows it everything, because if they did, guess what? They wouldn't be advising, they would be allocating their own money and growing it in the process. So honestly, you really don't need an advisor to get started. If you feel comfortable, definitely you can get advice and so on. And obviously there's so many resources out there, including my channel, where I'm really trying to bring transparency and light onto the topic of investing. But yeah, you really don't need that to get started. And that brings me to the second point. People say the more complex the investing style is, the better the returns. And once again, that couldn't be further from the truth. Yes, maybe it works for a year, 2 years, but in the long term, time-proven strategies such as investing into an index, for example the S&P 500, has outperformed the majority of investing classes. If you can't explain your investment strategy to a 10-year-old in simple terms, then either you haven't understood it, or it is overly unnecessarily complex and doesn't really bring any added benefits. Unless, of course, you're a professional full-time trader working on Wall Street, then, by all means, it probably might get complex. But honestly, for the majority of investors like you and I, it is absolutely simple and you really don't need a PhD to get started. Another question I hear a lot is when people ask me, is saving the same as investing? And I do understand the question, right? Because right now you can get 4-5% on the saving on your cash at the bank. So it feels like, you're earning passive income, and it's great, right? But obviously these high saving rates, they don't last forever. And that money is more meant to be as an emergency fund, because again, in a few months or years, that rate will come down and you might be getting 1 or 2%. So it's not really investing because the capital doesn't grow. Yes, you get an interest from it. That's great. That hopefully keeps up with inflation, but it doesn't really grow your money. Only if you invest, you grow the principal, the capital you have. Plus, ideally, depending on what you invest in, such as real estate or dividend stocks, you do get a passive income component on top of it. So that's really long-term where you see the difference. For the short term, it's great to save money. Absolutely, I'm all for it. But long-term, growing and having your money work for you, that's the way forward. And that's how we start building wealth, because it starts compounding and snowballing in your favor. Another one I often hear is, Kai, it's way too risky. I'm not going to invest and put my money at risk. I understand that, but it goes back to one of the previous points. It depends on what you're investing on. And there's no right or wrong, right? Some investors have a very high risk versus reward appetite. Others have a lower risk tolerance. I myself would consider myself quite conservative, because I don't invest in many of the growth and tech stocks out there that other people feel very comfortable to put all their money in it. So it firstly starts by knowing yourself. But if you are, for example, very conservative, then just invest into an ETF following the S&P 500, for example. That is pretty safe. You can withdraw your money anytime. There might be small swings here and there, but over the last 30 years, it grew on an average of 8 to 9% per year. So honestly, you'll be in good hands. Of course, there are also other investment classes such as real estate, gold, bonds, all of them have different risk versus reward profile. So I personally think leaving all your money uninvested at the bank is probably the higher risk, because you most likely losing out on growing your money in the long term. So in my opinion, yes, I do recommend having some money put aside for a rainy day, but at the same time, that money that you can invest, definitely put it to work in your favor. Another false belief I often hear is when people say, it's too late. I should have invested earlier. I'm too late to the game and I probably missed out everything. And honestly, unless you're 89, 90, which if you're still watching my YouTube channel, I really appreciate it. It means a lot. But if you're not, you're most likely younger, and that means you still have time. Of course, it helps to start early. If you can start investing from 18, amazing. But if you only start investing from 30, that's also great. If it's 50, that's also amazing. Because also, let's not forget, we as human beings getting older and older. So time is on your side. So if you're 50 and start investing, you're still going to have another 20, 30 years easy where you can start benefiting from a compound exponential growth of your investment over time. Now, granted, if you're later to the game, you might either invest more conservatively because you don't want to, burn all your wealth that you created over the time. If you're younger, 18, 20, you can be a bit more aggressive, right? Then maybe investing into bonds or gold might seem a little bit boring. And I get that, right? And that's why I never give investing advice to people, because it's so different from person to person, on your age, on your risk profile. So there's so many factors to consider. So for me, it's just important to educate you. You ultimately have to make your own decision about that. But honestly, it's never too late. Of course, the best day to invest was yesterday. The second best day is today. So let's get started. And on that note, feel free to subscribe to my weekly newsletter, where I share with you weekly thoughts on the topic of investing, as well as all my stock buys that I did during the week. So feel free to sign up. And as a welcome bonus, you'll get my free budget and net worth tracker, which is very important to track all your numbers and see how your net worth develops, hopefully in the right positive direction over time. Another question or comment that I often get is when people say investing is only for the rich. You need a lot of money to start getting invested, right? And once again, this couldn't be further from the truth. We're living in times where you can invest from literally as little as €1 and start buying shares. That's just absolutely amazing. On Trading 212, for example, and there are many other stockbrokers out there, I could start buying Apple shares for €1. You could do this every day, multiple times a day. And on Trading 212, for example, there aren't even any commissions, and there's no monthly fee. There's no minimum fee. There's literally no reason not to get started. If you spend money on a coffee, you can start getting invested. And that's really amazing, because a few years ago when I started investing, it was so difficult. Only some big traditional banks, and it was such a painful experience. They charged me, I believe, €10 per stock trade. Mind-boggling. So we really came a long way, where now there's no more reason, no excuse not to get started. And once you start, it's perfect to start with small amounts. It's actually better not to start with a huge amount, but start with a small amount and then dollar cost average yourself and get a feeling for it, right? Maybe you realize you don't like to invest into stocks. You maybe want to buy something else, or you want to save up for real estate, whatever it is, right? But start getting a taste of it. If you don't know, otherwise it's just a theoretical exercise. The best thing is become a practitioner and try different things so you know what you like, what you don't like. That's the best way to learn and grow and become a better investor in the process. The next myth has to do with the price of the stock. And honestly, that was not something I was really thinking about, but now I realized that a lot of people have this question. That's totally fine. So the question is, when people, for example, see a stock that is priced at $1,000 for one stock, they say it's very expensive. Maybe I should better buy a stock that's priced $50 so I can buy much more. The principle in the end is exactly the same, right? The price of the stock means absolutely nothing, right? It's just an indicator. What's important is the price of the stock times the number of shares. So basically the price of the stock itself really plays no role. What's important are the numbers behind it. The PE ratio, the price per earnings, and many other parameters matter much more to determine whether it's an expensive stock or not. This is something to indicate, but just the price itself means absolutely nothing. For example, Apple used to be much more expensive. Then they did a stock split. That means, for example, one share became 2 shares, and all of a sudden you have way more shares available. Therefore, now the price also dropped accordingly. So really don't get confused with the price per share. That's just an indication. But ultimately, it's how much ownership you have in a company. That's just a combination of price per share times number of available shares. That's what matters. Don't only look at the unit price. Another point that I'm really passionate about is when people tell me or comment on my videos, no, you should not be investing into dividends. You should be investing into that or that or that. And I always smile and think to myself, guys, there is no right or wrong in investing. Now, granted, there is wrong. If you invest all your hard-earned money into some random cat meme coined cryptocurrency, probably that wouldn't be the smartest, right? But apart from that, as I said, there are so many other ways how you can invest your money. If you like real estate, that's amazing. One of my best investments has been real estate, right? In Dubai. Has been doing tremendously well for me. At the same time, I know people who made so much money with Bitcoin. Other people love investing into growth tech stock companies such as Apple and Microsoft. Other people like to invest into dividend stocks, which I like as well. So honestly, there's so many different parameters that defines your investment style. Don't let anyone tell you how you should allocate or invest your money, because this very much depends on you. The best analogy I could come up with this is cooking a tomato soup. I mean, that's pretty straightforward, right? But why then do we have thousands of different recipes how to cook the perfect tomato soup? If it was so clear, if there was only one, there should only be one recipe. But there isn't, because people have different tastes, different styles, how they like the things, and you have to find what works for you. That's why I always say, try different things, get a feel for it, understand what each different investment class does, and then you can decide what is the best for you or which soup tastes the best. And the last one that I hear quite a bit myself, actually, it's funnily because I'm very transparent with my investments, and I put even my weekly buys out there for people to see and just follow my investing journey. Not that this is any buying recommendations, but I just like to be very transparent about this. And then, people comment when my stocks that I bought 2 weeks ago dropped by a few percent. They say, ha, see, I told you, you bought the wrong stock. And once again, I always have to laugh because I'm a long-term investor. I'm not day trading, right? If I buy a stock that goes down, I have absolutely zero issues with that. I actually expect them to go down, right? I mean, that's normal. Stocks go up, stocks go down. In the long term, 5, 10, 15, 20 years from now, I mean, they should better perform. But at the same time, I'm not a short-term investor. That's something also we really need to understand. The time frame really matters. Imagine in your own career or your business or your personal life, even your marriage, right? I mean, you have some pretty rough days sometimes. Doesn't mean you end your marriage right away. Doesn't mean you leave your job or you're gonna get fired because you had a rough day. Absolutely not. It's normal. Life is cyclical. There's ups, there's downs. Long term, of course, you want to be on the upside, right? If every day is negative, then of course you need to make some changes. The same with the investment. If you see a stock or company going down for a longer period and you start investigating why the reasons are, if you're, for example, investing into an industry that is technically disappearing in the near future, then of course it might be time to shift your allocation and your investment into something else. But other than that, don't panic. Too many first-time investors, they only follow what they see on social media or the headlines that they see in the news. They panic, they sell, and that's usually when you start losing, because time in the market always beats timing the market. Too many people try to time it, and we are not professional investors, right? So the best thing you can do is be in the market, invested for the long term. This way you're guaranteed, if you invest into strong, safe companies over time, to have a positive return. I hope I cleared up some of your thoughts or questions you might have had about investing. If you still have any, pop them in the questions below or shoot me an Instagram DM. Always happy to answer and get back to you. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao!